With fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Something black and
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Let's go into the charts. Bada bing, bada boom, we go. Well, it looks like we have reclaimed that one level of the bearish trend-based fib extension level as of yet. We still have an hour and 15 for the daily candle close, but I have to take my son to school by that time, so I won't be able to update you at that time. But the reclamation of this diagonal pitch fan level of the 382 and reclamation of the 1 could be a change in market structure to come up into this resistance region. I will not be sold on the long idea unless we get above the 28.2 level above this daily range and hold it basically at this equilibrium point of the 0.5 of this diagonal pitch fan. Let's go into the high block capital heat map. What is the heat map? Well, it's when people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters lie in wait. thanks to this nice tool. So let's go into the 1 minute time frame here for High Block Capital. All right, so what is this gobbledygook right here? You have to zoom in to see what happened over the last few hours, and basically they broke out to grab the 150x and 25x that they pulled up here, while at the same time inducing a lot of longs, 100x and 50x longs that were impatient campers, and then they came back and grabbed them without hesitation.
Fatality.
Yes, and they don't hesitate, and then they proceeded to trap some shorts, 100x and 50x and beyond, and started to retrace back into those as well. So this whole wick-whacking of price action since you're down a New York liquidity pool was some algorithmic noise to trap and steal liquidity of impatient traders not waiting for better market conditions. So they just gobbled up some here, and now could possibly be heading up to the 27.608 region based on what is trapped in these candles heading higher. However, you must take note of what we were pointing out before down at 25.777, and this entire path being paved with liquidity. But as we like to look at this price action bar here in black, and these ramen noodles, as I call them, the ramen noodles are stacked more immediately to the upside here, so we could come up to that 27.552 region based off of how much broth in our soup is down below. There is less noodles here within the price action grab here. The thickest region is of course down in that 25.777 region. Once they start to go up here, if they stop loss hunt these people to drop it, that could be in store. Let's expand our vision to the higher time frame of the 7-day and above to start to see where those external liquidity pools lie. Shout out to everyone here on the live stream, 4 of you beautiful people chilling with me. As it looks on the 7-day time frame, you do have a couple, about 10 billion up towards the 27.5 region in the last 7 days. This is the 7-day time frame, and that imbalance is existing in shorts. The sentiment of shorting the market, it seems to be stronger than the longing, so they're going to take advantage of that sentiment shift where people are thinking that the short is the more predominant play. So as it looks on the 7-day time frame, they're heading up to that 27.5 region, and then on the monthly you also see that 28.1 and 28.2 region of the double digits coming up to that range high up here. Could be in play as of where we stand currently. The prices do insinuate that we do go up to this region based on the monthly time frame, and the liquidity below is sparse by comparison in the immediate price action range. Granted, when you start to go into the lower 24.6 and below, you do get those double digits again, but not in as much of a heat signature as what is located above. So this 18 billion at 28.1 seems to be the target as of this exact moment in time. Is this going to continue? Only time will tell. As we go into the 3-month time frame, however, you start to see this liquidity down below looking kind of juicy, although as we start to create our distance from that zone and start to see the heat signatures up here at 31.2, $60 billion, 52 billion at 30,002. These used to be not as thick. If you go back here to April 25th, let's just do it to show you how green it was here, not so yellow. There is, double digits in the 40 billions was the highest level back in April 28th. But if you go and compare this higher region now, you have a lot of yellow, 52 billion, 60 billion, 50 billion. These are all these tiers are all double digits of billions: 30 billion, 32 billion, 36 billion, 42 billion, 36 billion, 43 billion, 38 billion, 35 billion, 42 billion, 44 billion, 50 billion, and so on and so forth. You get the point. So to me, just juxtaposing the 3-month time frame now, if you just look at how many billions are down below, all the way down to 21k, compared with what's above to 35K, it looks like the imbalance is now to the upside based off of this 3-month time frame. Since when did that color shift occur? It just occurred over the last few days by the looks of it. When you look at the 6-month time frame, however, you do see that there is a thicker pool down below on the 22.5 region down here at $100 billion at 22.5. Does coming down here destroy the narrative of the bullish narrative? Not just quite, but it would put a damper in the bull's parade. Is this the market makers' positions that they are assuring to be safe as they start to head up to these regions? Even if you make it to 28.2, that's $47 billion on the 6-month time frame, and that doesn't mean you're going to continue forever, so you could retrace back down into these pools at that time. Nothing lasts forever, so this could just be a bounce, a dead cat bounce, before we head down into these pools on the 6-month time frame. Now, we skipped the yearly because we lost the range over from June of last year, so we don't have this beautiful range that we dropped down out of, so the pools look thin over here on the yearly time frame. So we use the 2-year time frame on the Binance chart, and if we look at that on the 2-year time frame, you do have that $159 billion up at 32.4. You have 154 down at 24.4. So this 154 is closer to our current price target. So if we go up, do we come down into this region for that external liquidity grab on the 2-year time frame is the question. This is quite a hop, skip, and a jump away. Not necessarily bullish just yet, but it is kind of interesting to note how many pools we still have open over here, even in the ranges of the 50K short region. You have these $50 billion pools up here and $77 billion pools up here, and all these shorts still open like marionette strings dangling above the price, even though we have a lot below as well. 200 billion down at 15.2 and 100 plus billion on each of these ranges on the way down to 21.5. Kind of looks ambiguous as of this moment, but the immediate price action insinuates that there is this pool down below at 24.4 of 154 billion that we could retrace back into, which is why we have this little Hail Mary play on the bearish trend base fib at the 1618 or the 2 level, for which we could come back down in ABC fashion. All right, let's go into the Binance chart and see what we can see with our oscillators and the Fibonacci. Shout out to everyone here. Booyah, booyah. Let's go. All right, so we have this trend-based bearish fib level of the 1 that we're attempting to reclaim our way out of. We're going to do a retrace as well on that to figure out where we can get out of this mess possibly. So let's go ahead and turn on our heads-up display and our oscillators. Whoa, sorry about that. We're attempting to reclaim the cloud by the looks of it, just off the top of our head. Well, what is the cloud, do you say? Link in the description for more. Scroll down to features, toggle all of these heads-up displays at your leisure to see what they're like with the toggle switch, or read about each component and see it in its glory. For what we're talking about right here is the daily cloud. The angle of this cloud is insinuating a shift on the daily time frame if we can reclaim this level. About 2 days ago, we were talking about possibly coming up above this, retesting, and then going beyond that level. And then if you saw the cloud shift in a certain manner, oh, what in the world? If you saw the cloud shift in a certain manner, then that would be your idea for an ideal long if the cloud does shift. This is what similarly happens in this manner. You start to shift and get out of there on that time frame. Similar to here, you had the cloud shift and boom, you were taking it to the upside. So those clouds shifting and into it, the volume-based cloud here starts to give you those angled intuition about the possible reversal ideas. So we also had this cross-up event on the daily time frame, which is not to be ignored, and we are holding the baselines. With the baseline separation here, it insinuates that the momentum could continue on the daily time frame. While we are starting to taper here on the stochastic RSI and Momentum Master B, it does seem that we could go up a little bit higher on the daily time frame. You are at a 94 value of the overbought status of the stochastic RSI, but the money flow and the RSI are at the 50 level, just chilling in wait for a potential suppression to the upside here. You did have previous bullish divergence on the money flow, which triggered a stop loss hunt, and then we were out of here. Also, you had the Williams in an oversold status that's just now starting to pick up steam with a leading MACD cross up event on the daily time frame. I think the 5-day is now coming to fruition in the next day in 4 hours, so we can see how that is going to occur. If we start to maintain on the 5-day time frame, you're starting to curve the stochastic RSI ever so slightly. The Williams could come up for a double top event after coming out of the oversold or overbought region, and this 5-day, if you can start closing 5-day candles above this baseline, then you could start to negate the suppression of this cross down event, which we had for you back on Sunday, April 16th, and has been continually suppressing the price. Well, what is the baseline, you say? Well, the baselines are your first signs of reversal. So that's why we were pointing it out back here in April 16th, and without hesitation, it did start suppressing the price in that manner. Same with the weekly time frame. We are seeing that weekly cross down event as of May 1st, which has been continually suppressing as well. So until we can start closing weekly candles back above these levels of 27K and above, then this suppression will just continue to see sell-off wicks on the downside as we reset the oscillators and our liquidity pools. All right, so let's go into the daily time frame once again. And let's see the 22 actually. So the 22 got its double top event off the cloud of its reclamation of its own cloud, and bounced off of that, closing out a stopping volume candle based off the PVSRA strategy, but still maintaining the baselines. Could still get another push here on that last hour here for the 22-hour candle close. The Williams does suggest it would keep going a little bit higher before it crosses down, although you have seen sharp reversals at this angle in this similar fashion. The 22 just gives you that intuition when this is coming to oversold and overbought status, when the daily is not in the same way. This is the unsyncopated rhythm of the 22-hour, which back tested to be true by yours truly. If we come to the 12-hour, also starting to reclaim that cloud on the 12-hour, baselines also open in a manner here, could come up for that subtle suppression here. We were talking about that angle of the Williams and how it doesn't always so sharply cross over. It takes some time for the average of the Williams, with this whole smoothing back tested area that we found, for it to come up before it crosses down. So we were saying we're not necessarily waiting to short just yet. As this starts to come up and fatigue, and you see an alarm cross in a similar fashion here, you had a cross down event on the 12-hour and an alarm cross, and boom, you could take that to the downside here on April 16th, Sunday. And then also here, you're not seeing the baselines above price just yet, so that's not why I would like to short just yet. You want to see all of these in the fatigue position from a lot of time frames in confluence with one another. But you could catch scalps here and there if you are smart at taking gains off the table. As it stands right now, we're getting a sell-off wick. Let's go see what they're grabbing in this immediate 1 minute time frame. What did they come back into? So you have some 100x down here as opposed to some 100x up here. it is kind of thicker in 50 million as opposed to 24, although you do have 166 trapped up here, 166 million trapped up at 27k from opening a short into this red candle here. You can see where they open them, and these guys are underwater. So are they going to let this $166 million pool of 50x shorts out of the clear, or are they going to try to induce more before going back to their entry and then start to go up back into this pool? You get to see how the action causes inducement of different positions on different sides, and based off that inducement they start to shift them into drawdown and eventually liquidation. It's like a price action snake that goes to eat the little pellets of food like Pac-Man, so it's very fun to watch where they want to head in their price action schemata. So as it stands right now on the 6-hour time frame, we are attempting to reclaim the weighted moving at 200 weighted moving average, and we did negate that cross down event that was flashing to occur, which you could also alert to your phone with or without me by using Momentum Master A and switching over to your alerts and putting the baseline cross over or cross under for that time frame of your choosing. So seeing that this was getting negated could have told you the play was not in that favor of a short. You did get this cross down event, which did give you a smooth little 1.5% on that before we started to point out the bullish divergence forming on the hourly. So let's go back to the 6-hour, give it its due diligence, and go into the oscillator B. So you have the cloud card starting to shift in your form and your idea here. We did talk about potentially coming down and kissing the cloud. This little bit of happiness at 25,778 happens to be this character here, this $366 million 25x character, and his comrades in arms down below that they could come back to and retrace and kiss the cloud. This idea of a cloud kiss, and this could be an extended M to the downside, could just be a idea of coming out. Since False Move Monday was essentially not was denied by the holiday of America's pools being down, this could be another false move embedded within the schemata of the week, and this could be False Move Monday, but False Move Tuesday with Wednesday, Thursday being the play for the week. So please take care and lock in gains whenever possible. We did come back and grab this pool that we outlined way back in June 7th, so we can delete that pool. They were taken off the table, lost to Father Time, but obviously got reclaimed. So that is taken back. If we go into the 4-hour time frame, we have seen that the 4-hour is now starting to essentially play out. It did reset in a nice manner by going sideways. This is like what we see continually. If you see this reset of the price action going sideways while this oscillator resets, this is why we started to look for the bullish divergence on the hourly, and we saw this start to occur with this money flow bullish divergence here. This crystal appeared, and then we started to see the price action cross up here, and we started to see candles coming here, and we said there's bullish divergence on the hourly, please be aware if you're in a short, and boom, we banged it up to the upside. So started to get the bearish divergence over here. They stop loss hunted and came down, trapped the shorts and longs as we pointed out, and now we're heading higher. The hourly is getting overbought here, so this is your Asia likes to pump it into Hong Kong, and then after Hong Kong fades it for London. So we could see a fade of wherever the daily candle closes in about 2 hours time. So if you come up to a certain region, let's just say we come up to the adaptive here and hit this pool at 27,470, then you could start to come down a little bit more. So where do you go from there? This pool that was back from June 1st could be tapped in this fair value gap area as well, also bouncing off the adaptive on the 4-hour time frame. So give the 4-hour time frame its due diligence. See if it can come up and get rejected at the adaptive moving average, which has been previous resistance. Are we going to come back up and hit that resistance on the 4-hour time frame? First of all, I'd like to see that daily candle close strong above this cloud for any type of bullish narrative to even be thought of as occurring. Once again, you have 54 minutes for that to occur. So if you see where this is going to come up to, that would be worthy of noting. So the hourly time frame right now is getting overbought. And you have the 15 ambiguously trying to make its way out. You had previous money flow divergence bring you up, hidden bullish on the money flow on the 15, which is starting to come up here. Cloud is holding as we make our way up, however ugly it looks on the Binance chart. Moving on down to the 5-minute. So if you're a scalper, like, you could play these cross down and cross up events all day, as some do in the Momentum Master Discord. You play this cross down event and take it for what it's worth, and then when it starts to cross up, you take it for what it's worth, and then you can basically just ping these baseline crossovers till you're blue in the face. And generally it will send you into profit from the moment you enter if you follow the criteria of the candles closing above them and beneath them for the most part. All right, so let's go in. This is why we bleed the candles of the opacity, to make them more prominent on our charts, because they are undeniably powerful. Okay, so yeah, basically you got 53 minutes for the daily candle close. We're getting a sell-off wick on the daily time frame. If we can maintain this slightly more powerful close on the daily to at least close above the cloud, then you can start to see this possibly come up within the Asia lunch session. Basically by lunch they start to fade it. I'm in Asia, so I'm predominantly more aware of what's happening in Asia, but Hong Kong basically, here, let's just go back to an example of what I'm talking about. All right, so here, for example, so Asia like pumps it up into the close, and then they fade it into London. So here's Asia, and then you fade it. Hong Kong fades it. Hong Kong opens about here an hour after the daily candle close, and then they fade it into London. And then London just does whatever it's gonna do and then hands it off to New York. And then the handoff happens at about 11 p.m. my time. And they did like a stop hunt, and they had this cloud shift, and we put that idea out for you that this kiss to the cloud was your entry, and boom, there you go, it was to the upside here. So yeah, Asia generally like sets it up for London, and watching the interplay of the different time intervals of the liquidity pools of the different time zones, you can get that for free with ICT kill zones here by Tradinator, and you can check that out at your leisure. But yeah, noticing how the Asia session interplays into London, which interplays into New York, and then the London close being a pivotal moment in time, which is why being down the New York pool was surprising, that we had this move to the upside during that low liquidity. All right, so where do they take it? Do they take it to the upside to grab these shorts, particularly the 27K region of the $166 million of 50X up here? To be frugal, I would say yes, up to that region. I would say to be frugal, going to the 27K region to grab this $166 million in shorts liquidity, which is trapped here, would be the ideal thing to see. And possibly going a little bit higher into this higher stacked range up in this 27122 region, Let's go mark that off, and 27,122, that would put you about here. So that's not going to even get you up out of that range just yet. So ideally though, you'd want to recover this fair value gap from May 31st, when we drop down into this region, recovery of that value. Also, we put a noteworthy pool that was up here that's lost to Father Time, which could likely still be open. That is what the fair value gap recovery is. This drop down here, it has liquidity pinged in, which they're attempting to get them to close at a loss or liquidate. So that's what the whole price action movement is about. A game of traps through and through. So are we going to go up to this region? This is where I'm seeing it go. This is my story and I'm sticking to it for now. At that point, do we come down into this region? I don't know. I'm going to leave you at this because by the time we get here, I'll have another update for you. And that's my story and I'm sticking to it, short but sweet. Let's take a look into the charts, see if you have any requests for anything. Is this it? It's time. This is what we were waiting for. What's up? ERV Gems. Thank you for stopping on in. All right, so if we go into the DXY, we are seeing the DXY come down into this pool. We had this projection out back in May. Let's erase it now. It's basically complete. It's all in the past. So if we go back to where the DXY is wanting to go from now, we can remove some of these projections. Let's see. This is double bottom is now negated. So on the daily time frame, so basically, how did I get this bearish trend-based fib level that we came back into? Let's remove the retrace here. So I'll just do a quick thing on trend-based fib extension levels. If you go to your fib retracement tools, favorite your trend-based fib extension. Trend-based fib extension is a matter of impulse retrace, also known as your A, B, and C waves. If you're into Elliott wave, it's the same concept through and through. It's just using math based off of the impulse retrace idea, but it gives you nice math. If you go here from this impulse to the downside to the retrace to the upside, it did contain some math where we would consolidate within this resistance zone and the trapdoor being opened at the institutional 706 level, boom, down into the Hail Mary 1618 region of this level of the bearish trend-based fib level, and we have yet to reclaim any of these levels, so we could even come as another ABC further on down to the 2 level. That would be nice to see for Bitcoin. The 4-hour is getting overbought. You are getting a potential cross-up event of the 12-hour time frame, which would also ensue with some possible price action up on the dollar yen. This is just to be noteworthy of. And if you go to the daily time frame still has a while for this to get beneath the price action. Now ideally you'd want to see this consolidating beneath the price like we did here for that double bottom idea that we put out before this came to fruition. So is this the ideal position for a swing long? No, it's not. Maybe you'll see some scalp up into the 1 region of here. And yeah, if you see the 12-hour time frame, this is putting out the idea of a potential cross up event. If you look at the 6-hour has already crossed, but it's been fairly weak thus far, and there's been a lot of fake outs on the way down for dollar yen. All right, so let's look at the S&P real quick. The S&P is coming up into a fair value gap region, getting nukes as we get overbought on multiple time frames from the daily, 3-day, weekly, all of these time frames getting overbought massively. Still having the baselines up beneath the price though, so when you get that suppression, you could see something massive coming up into these regions. These are all fair value gaps from over here that we could come into. All right, ladies and gents, I don't want to take a more minute of your time. I got to get ready to take my son to school. As I said, that's my story and I'm sticking to it for BTC. I'm seeing the short squeeze continue at least up to a region here at 27,116 and possibly beyond at 27,482 to recover that vector over on the left. We'll see. We'll keep you updated at New York. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part and coming on in, and we will do the same, bring in the fire, the precision, the accuracy, and all that fun stuff. And